Microsoft have just released their earnings for the full year of 2022, and we're going to be going through these numbers right now. Then we're going to be looking at my stock summary spreadsheet, my buffer Graham intrinsic value, and discounted free cash flow models to see if Microsoft is a buy off these updated numbers. So let's get straight into it. No fluff, no stuff. Oh, also going to be going through some technicals at the end of the video. But here we have the 3 months ended on the left and the 12 months ended on the right. Firstly, we're looking at revenue. Revenue has gone from 46.1 billion to 51.8 in the 3 months ended, and it is up massively on the 12 months, up almost 30 billion, 168 to 198. Now, where is this coming from? As you can see quite clearly, product has remained relatively flat, but services and other is up to 125.5 billion. So this is the Azure sector, all of their subscriptions, Office 365. This is the main money maker for Microsoft, and it is pretty key, and we'll see I'll go into it right now. Net income 61.2 billion to 72.7. Why is this so important? Well, 125 billion of revenue and only 43 in terms of cost of revenue. It was up slightly, so this is a massive generator for Microsoft, and they can keep scaling this up. It's going to generate more and more revenue for them. The net income margins are increasing, and therefore the net income is going to shoot up. Yep, so that was 61.2 to 72.7. So up massively once again. With shares outstanding, are they buying back their shares? Are they issuing more shares? They're buying them back, 7.547 billion to under 7.5 billion. So if you had one share of Microsoft and there was 10 shares, you would own 10%. If they issued 10 more shares, there were 20. Now you'd own 5%. If they bought back those 10 shares and then bought another 5, there'd be 5 shares. You would own 20%. So you want them to buy back their shares because it gives you more value. Finally, we like to look at the free cash flow here. How do we get free cash flow? Well, it's net cash from operations minus capital expenditures, which is purchases of property and equipment. And you can see that the net income for operations is 76.7 up to 89. And the capex is only increased by about 3 billion. So overall, if I can do the quick maths, 89.23 is about 65.1 billion in free cash flow, up from 56. So free cash flow is up. Why is that good? Well, you'll see why in my discounted free cash flow model. So firstly, we look at this sheet. It's mostly automated, but I've had to add the most recent numbers. You can see we've got the price, the market cap, analyst targets at the top here, 287 on the low end, 411 on the high end, and Microsoft is currently below everything. So analysts are getting this wrong, but it just shows that analysts believe the hype, and they'll always say things are going to go up when Microsoft is going up. So this could be an excellent buying opportunity. PE 26, earnings per share 9.5, beta is almost 1, shares outstanding 7.5, dividend $2.48, which is a 0.98% dividend yield. We have the most recent earnings up to 21. We have the previous trailing 12 months. You can see revenue has gone up 100 billion in that time, because it's 196 billion. Net income is up as well, and free cash flow, obviously it's trailing 12 months increased. It's gone to 65 billion, and we also have the latest change, so it's down to 255 days, which is about a year. But if we go to 1,000 days, you'll see that Microsoft is very much up. So let's get into my valuation. What I've done is I've manually added the most recent numbers, 198 billion, 72.7 and 65 in the free cash flow. And what does that give us? Well, it gives us a calculated stock price of 290, which is currently a 12% discount. Now, one thing that I want to show here is that this is based on the averages. So if we look here, the most recent revenue growth rate is 16%. We've got that lower. So let's just say Microsoft continues to grow. Let's take that to 17%. Net income margins, it's hovering around 30% and it's increasing. So let's just say we can get that to 37%. Free cash flow revenue, let's see what this number gives us. See, that's a very high number, but I think we should drop down this a bit. Let's say the averages is around about 92. And where does that give us a fair value of $292 a share, which is a 12% discount. So discounted free cash flow model says this stock is a buy. Next is the buffer Graham intrinsic value. What do we need to add? We need the expected growth rate of Microsoft. So if you click this handy dandy link here, it will take you to the Yahoo page, and the next 5 years is 15.74%. So let me just add that in, 15.74%. And that has it at a fair value of $400 a share and a Graham price of $298, which means it's massively undervalued at the minute. And I think both these models are in agreement. They say it is a buy. So finally, what I want to do is look at some of the technicals on Microsoft. You can see the market's still not reacting favorably, down 1%. Not really loving it, not really hating it, which I think is very strange. But if we go to the indicators there, and let's firstly add in the moving averages. So the ones I like to look at, which are the two easiest, is the 50-day, which is a shorter moving average, and the 200-day, which is the longest. So let's just add the 50-day and quickly copy that to the 200-day. Probably should have done this earlier, but you know how it is trying to get these videos out quickly. This is the 4th attempt at me doing this video. I think it might even be the 5th, so I'm a little bit annoyed at that. But hopefully you guys are enjoying it. Very interesting here. Over the last, since January, the 50-day has acted as a bit of a resistance point, and it's dropped below that again. If you go back in the history of Microsoft, we have not really seen this for, well, a very, very long time, if ever. Probably in 2000 we would have seen it, that's for sure. But it hasn't happened in a while, and we would have had a death cross here. So currently, if it does break through there, it's dropped back down. And there was a death cross here and a lot of negative sentiment at this point. So if you actually saw the January, because the price dropped below there, that would have been a great time, would have continued. So moving averages, it is in rather negative territory at the minute. Next, what we look to look at is the RSI, is the stock in overbought or oversold regions. So let me get in the relative strength index. Currently, it is trending towards oversold regions, but not too massively. And we can see when Microsoft has got even lower, it's had a good move to the upside. Quite a few. This was when it dropped down massively and shot back up. Even here was a great example. So if it was to drop any lower, I would say this was a massive buy signal judging on the history of Microsoft, and it does at least tend to get to the average. But if we look on the history of Microsoft, it's been pretty consistently even towards overbought regions. So this is one of the more negative movements in a very, very long time once again. But if you look at the company's financials, I think it is still a solid buy. And finally, let's take a look at the MACD, which is the moving average convergence divergence. What is this? What do we want to care about here? It's looking for trends in the stock. So currently it just went positive and then negative again. You can see when the MACD and signal lines cross, but also when the histogram is green or red. So you can see it had a short move up and the negative. Normally Microsoft has very powerful moves to the upside, but you can see recently it's been a lot of turmoil. So the trend shifted and the trend has shifted back. Easy for me to say. Quite difficult to say actually on the MACD at this current moment. It does look like there's a negative trend, but you can see here these negative trends and positive trends have been pretty short since December. So overall, I would say normally if Microsoft's a negative trend, wait a little bit longer, then your buying opportunity is there. But right now they have been quite choppy. So, I mean, technically, I think it is a bit of a weird one, but do like the financial statements, the balance sheet, net income, and the cash flows. I think the models are correct, and this stock probably is a buy. I mean, I think it's a good opportunity. Right, guys, thanks for watching. Please give a like if you enjoyed the video, and I'll catch you guys next time.